What's up everybody, it's Alex, and today I'm going to show you how to trade ULTA earnings. So guys, let's go ahead and get into it. I'm not going to waste any time. Basically what we're doing is going over earnings data, okay, keyword data, to help you increase your chances of winning, because the truth is when you're trading, we all get emotional. It's hard, right? It's not easy. And so if you have some data to give you a baseline, guide you through the trade, and give you a little bit extra confidence, it's definitely going to help you a ton. And then we're going to go over one of the most crucial things to understand when trading earnings. All right, if you don't understand this, you're going to have a very hard time when trading earnings. So guys, take a look at ULTA earnings here back in August 27, 2020. What do you see here? Your best entry is going to be puts at the open, right? It gaps up, puts at the open, boom, bearish continuation into the following day. Now, please take note of this bearish continuation, okay? Because you're going to see it's a reoccurring theme in the following examples. Okay, once again, let's just reiterate, your best entry puts at the open or on the bounce when it gapped up here. Okay, let's get into the next example here. You're seeing here, whatever month that is, it pulls what I call a shoe carnival. Now I'll explain to you what a shoe carnival is here more in depth as we go along the video, but for now just look at this. Basically it gaps down a little, goes lower, okay, and so when everything looks super bearish, you're starting to buy puts. That's actually when it reverses on you, goes up, and then you're going to have a really bad day if that happens to you. So this is why you need to first be aware of it. That way, if it does happen, it does occur, you're going to be ready so you don't fall into that trap. Okay, so you see that really no gap, tiny little gap down, and it just shoots lower at the open, but then recovers for the day. That'll piss you off, and that's what we call the shoe carnival. Okay, ULTA earnings, January, February, March the 12th, 2020. What do you get here? Gap up, shorting it at the open, at the tiny little bounce. What do you get? Bearish continuation. So take a look at this, guys. Bearish continuation, all three examples we went over so far, right? Bearish continuation the next day, bearish continuation the next day, that's that day right there. Bearish continuation the next day. Okay, so hey, 3 for 3, you get bearish continuation after. Let's just keep that in mind as we work through these examples here. Once again, you'll see a DTR of 36, guys. It gaps up, DTR of 36. For some reason, guys, the scale here is so off. This looks like a 5-point move, but don't be fooled, guys. That is a 36-point move from top to bottom. It's just that this thing drops over 100, or not 100, like 50% within the following days, guys. I mean, that's an incredible trade. That's where if you put 10 grand into that, you pretty much don't have to work for the rest of your life if you catch that move, okay? So, look, gaps up, you're shorting it at the open or the bounce, okay? Pretty reoccurring theme so far, but let's keep it moving. DTR 15 on this example, what happens? You gap up, okay, once again, you can do two scenarios actually. You can actually be buying calls at the open or on the dip, or you could be shorting the bounce, and you could be going into the following days. Once again, this is the fourth example in a row where you get bearish continuation the following day. So 4 for 4 on bearish continuation. Once again, you had two scenarios you could do here. Just being who I am, I'd be shorting the bounce, but a lot of you would be buying calls at the open, right? That's the beauty of it. You can do whatever you want, but you got to be able to adapt and adjust, and then obviously stick with it through the day. And make the best decision you possibly can. Sometimes harder said than done, okay? But DTR 15, you get a pretty damn good DTR on the stock almost always. Okay, look at this example, August 29th, 2019, DTR of 19. Now this is a pretty relevant example, and we'll tell you why here soon. But what happens, they gap down and they actually missed earnings, I believe here. Yeah, they did miss earnings, okay? And so I'm actually re-recording this video today. I already had it planned, but I guess a waste of my time. Whatever, it's all good. So why are we looking at this example right now? Well, because it so far matches up with what we have currently, okay? ULTA is gapping down right now. Now, it's only down about 10 points from the close, so that's a little annoying. I'd rather just see a gap down or something, but hey, maybe that means we're going to get more meat on the bone. We'll just wait, and no need to come to a conclusion yet this afternoon. We'll see how it opens tomorrow, right? But once again, this would match. Why? Because it's gapping down, which is what we have now. It's gapping down. Second, it misses earnings in this example, okay? What do we have now? We're missing earnings in this example. And, well, you get a DTR of 19, so let's just pay attention to that. You get, once again, the bearish continuation into the following day. So what is that, 5 out of 5 examples? You get bearish continuation so far? Now, this is the next example here. Okay, now take a look at what happens. Once again, you get another shoe carnival, which I absolutely hate. It makes you want to quit trading. It's the worst thing ever if this ever happens to you. I absolutely hate it. Okay, and I pray that this doesn't happen, okay, because that's going to be a bummer. But anyways, we should be able to adjust if we notice it, and that's why we're going over it. So once again, I'm going to go a little more in detail on what the shoe carnival is, okay, and why we call it the shoe carnival, okay, but basically it's when it gaps down, it looks super bearish, it continues lower, and this is when you're like, oh yeah, baby, I'm going to short it, and then it reverses on you. And so, I mean, that's just one of the worst things that can happen to you. By the way, it says DTR 22 here, but in my notebook, I actually have 31, so this is a typo. Sometimes I forget to replace some things here on my slides, but anyways, DTR 31 here, okay, look, from top to bottom, right, that's what, 334 down to 300, right, so huge DTR move, tons of money to be made if you're on the right side, if you pick the right direction, you pick the right strike, okay, and it's going to be a Friday, so basically however many dollars you're in the money is going to be $1 on your contract of intrinsic value. Now guys, if you want a more, I guess, advanced little me actually explaining the options chain and hopefully walking you through this intrinsic value principle, let me know and I can try to explain the options a little more to you. But anyways, that's not what this video is about, so let's just keep it moving. But the last thing you want to notice here is that bearish continuation into the following day. Okay, so look at these examples. Look at these examples and look at the bearish continuation on every single one the day after earnings, right? Look at here. Bearish continuation after there, bearish continuation 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 there, bearish continue. Oh, never mind, we're out of examples. Okay, so that's what you notice is every single day it's been a shorting opportunity the day after earnings, which is going to be Monday next week. But hey, we can worry about that later. For now, we're trying to worry about what we're doing today on Friday or whatever time you're watching this video. Okay, so look at the earnings conclusion we put together. 4 out of the 6 times of these examples, right? Your best entry was puts at the open or on the bounce. Okay, so it's a very small sample size there, but that just gives you a base probability of 66% chance to win by blindly shorting ULTA. Okay, now average DTR. This is super important. I think some of you now realize the power of DTR, which is going to help us a lot with this tricky stock like this, guys. Okay, notice this. The DTR is 23 based on the last 6, and then actually based on the last 10. Here's a typo. It's actually 21.8 is what I've got down in my journal. Like I said, sometimes I forget to rechange these things. So based on 10 earnings, DTR of 21.8. Based on 6, it's 23. So basically 22, 23, it's the same shit. Okay, so that's our DTR. I'm just going to go with 23 because I have more of a recency bias. I like to take into consideration the more recent earnings more. And you'll see that every single time ULTA gapped up, you actually wanted to short it. But that really doesn't matter. Why? Because ULTA's not gapping up, and when I did this slides, ULTA was actually, or we thought it was going to gap up, and it didn't, right? It's gapping down, okay? They actually had shit earnings. So, look, let's go back to the examples where ULTA actually gaps down. Look at this, gaps down, recovers. That pisses me off. I don't know if it pisses you off too, but I highly doubt that's going to happen. Let me look at my journal here. 530, they beat earnings in this example. Okay, so they gapped down after beating earnings. Okay, so that makes a little more sense why they recovered. Today we've missed earnings. Okay, now look at this example, 829. 2019 here, you miss earnings, okay, and you continue lower, okay, so that matches up with what we have today. Now let's look at the next example where we gap down. Okay, this is another example where we gap down, but let's see here in my notebook. Nope, they missed earnings in this example and they still recovered. So once again, that's an example that pisses me off. You'll see that basically gives us a 50-50 shot based off of previous earnings behavior that we're going to win by shorting it, okay? But once again, this is what we call the shoe carnival. So you know both of the scenarios that can happen, okay? You're basically going to gap lower and continue lower, or you're going to gap lower and actually recover. And so basically what we got to do is use the DTR to figure this out as the day progresses, okay? So let's go ahead and show you this and how we would use the DTR on a stock like ULTA. So let's just say that it opens up at about 275. Guys, if it drops straight out the bat, from 275 down to, what's the DTR? It's 23, right? So if it drops all the way down to, I can't do math, guys, 275 minus 23, 252, within like the first hour of trading, it's not going to be able to sustain that move, or it's highly unlikely unless we've got a complete, shit markets, crashing tomorrow. I doubt it'll be crashing, but I mean, it's definitely bearish in my eyes right now. But anyways, right, that's how you know, like, if you've already matched the DTR within the first hour of trading, get out, okay? You want to either collect profits or be ready to actually go the other way, because a quick move like that's just not going to be able to retain itself throughout the entire day. For example, today on Octa, guys, you'll actually see that the move took a long time. And so when it's a steady move, that's an actual sustainable move. Okay, now you see this was such a violent and ferocious move to the upside that it was not sustainable. Okay, so all these crazy buyers came in, but they dried up completely, and that's when the sellers come in. Okay, so looking back on that, it's a lot easier to see back in hindsight. But guys, super proud of the guys who stuck with the data, understood the DTR here for Octa. So now that we're explaining the DTR and how you would use it on ULTA, let's go ahead and alright guys, let's go ahead and take a look at how the DTR was used on Octa today. So let's just say that you thought Octa was going to the moon. You were like, Octa is the best stock ever. Okay, so you take from the low, right? You're thinking, okay, Octa is for sure going up today. Okay, so from the low to the high, right, because we were expecting it to finish higher, you would expect that it would finish 12 points above the low of the day. And the low of the day was 243. Now, how do we get 12 points? Well, that's what we calculated was the average DTR on the stock. So 243 plus 12 puts you at 255, and 255 is just a couple points shy of the ultimate top for the day. So that's how you get a very good gauge and understand that, hey, first off, that's an average, so it's not always going to be, exact and on point every single time, right? But it's going to give you a very good gauge that, hey, this huge, ferocious, impulsive move to the upside, right? First off, see how quickly this move was, right? And a move that quick is not going to be sustainable, whereas, a steady drop like this is sustainable. You see what I'm saying? And so, look, you see huge, just dry up real quickly. Look at the buyers you have here. Then you get, you're moving higher, even less buyers. You're moving higher, even less buyers. Then you get flat, okay? And then all of a sudden you see more sellers, just barely there, right? So, it's the little things like that that you combine them, though. And so then when you combine these little things here on the chart, and then you combine that with the DTR, that's what can give you a little confidence to start, building a position up here, okay? Because the upside is very limited. And so when we say 12-point DTR, well, guess what? Now you caught the ultimate top, and so you're going down. So look, 258. If we're now believing that this is the high of the day, we shouldn't expect to drop much farther than 246. Okay, but this is one of those times where now you get blessed, you get rewarded, and you actually get a higher DTR than what we calculated, which was 12, right? So you go from 258. Now, as soon as you get down to 246, you should probably start collecting some profits, but you don't have to right away, right? If the thing's still dropping on good volume, why close out, right? So you can just let it run through. And to be honest, expecting a bearish continuation into tomorrow, it's not guaranteed. This thing can actually gap up and then continue lower, which if it does, guys, that's a decent trade tomorrow, okay? But, we're going to focus on these other earnings like DocuSign and ULTA tomorrow probably, but we'll see, okay? But anyways, that's how you use the DTR and Octa. Hopefully that helped you. Okay, and I know that this video is supposed to be about ULTA earnings, but you guys were wondering how did I know to cut a loss on the breakout higher. Okay, it's a very simple topic. You can go watch a YouTube video, but I can also make one if you guys want. That's just up to you. I don't really care. I'll do it, whatever. But you'll see here, right? See this huge impulsive buying candle? Okay, with big volume. Okay, and so what happens then some sellers come in, and you see it's on very low volume. That's what we call the basin candle, with even the wick sticking out, which is even better, right? Because that's actually a bullish sign when that wick's sticking out. So it sandwiches in between. Then you get this other green candle. And so basically how people play this is they speculate that it's going to break out higher on this third candle here. Whenever you get an impulsive one, that's the key. You need a very impulsive buying candle, okay? And so, on the third one, as you break right above here, that usually leads to breakout higher. And so on a stock like Octa, that was very obvious that was what's going to happen, because you could see the impulsive spike in buyers near the open. And so this is where I cut a loss on half of my position, okay, because I'm thinking, all right, if this thing's about to break out higher, why am I going to hold these and just lose more money? Okay, if I still want to short it, I can do that, but I'll do it later as this thing runs out of momentum. As of now, you can see the crazy volume. Why? I mean, I'd rather just get in later. Okay, so that's what I do. I cut a loss on half of my contracts, get back in near the top. Now, when I get in at the top, I actually got in about 256 today, so about 2 points off the top once I started to get confirmation. And once again, the confirmation was this volume starting to increase over the this basing period of just flatness here. Okay, and so it's not a crazy amount of sellers coming in at this point, or not on this candle yet, right? But the reason why you can have a little confidence there is because it's exceeding the volume of this flat period. Okay, and so that means it's kind of choosing its direction, whether it wants to break lower or break higher. And so I believe that it was breaking lower. And the reason I have that bias, why, is because we already went over the earnings, guys. 5 out of the last 6 times, your best strategy, shorting the bounce or the open on Octa. Okay, and so when I have that stat on my side, I have dwindling volume on my side. I also have DTR on my side, right? The 12-point DTR. I know we're basically at the top end of our limit on how much we can really continue higher, or unless it's an outlier case. Okay, but outlier cases aren't very common. And so, look, it's a lot easier said than done. Okay, but the truth is, you're going to be emotional here. You're going to think that this thing's going to the moon, and that's why you never want to gamble and put 100% of your money in on one entry here. Okay, you want to start building a small position, something you're comfortable with losing. Okay, and so once I got to this point, I put 40% of what I was planning to use on Octa today, and so as we get more and more confirmation, that's when you can actually start adding to your position a little more. Okay, so look, just try to never go all out on one entry, and that's going to help you a lot, because the truth is, your first entry is almost never going to be your first or your best entry. Okay, and so if your first entry is not going to be your best entry, why go all out on your first entry? Save some for later. Okay, that's what I do. It helps a lot. It's going to help make sure that you're losing trades don't really turn into that bad of trades, right? You're gonna make sure that you get a better fill later, which is really gonna help you, mitigate your losses. Okay, so guys, getting back to ULTA earnings, the reason I went over that is because that was a big play we had today, and pretty good to see that work out just how I planned. That was a big return there. Saved my ass today because, guys, I got on some SPLK puts, and that was a fucking shit trade by me. I basically got SPLK puts here. Okay, and well, let's just say it kind of reversed on me. So basically put me in a loss here on SPLK. But luckily, right, just adding to a position here, even though I lost some money on Octa at the beginning. Okay, just by adding to some position, right, you've got so much downside and such limited upside here that it's worth it. Okay, whether you lose that trade or not, right? I could have lost this as well, but I wouldn't have been mad because I would have known it was worth the risk to reward. And that's what you got to take, the risk to reward setups that are gonna reward you what you need. Okay, so finally, getting back to ULTA, guys, this was our earnings conclusion. But once again, ULTA is gapping down currently. Let's check on it now. Still 276, so 13-point gap down. Let's just get into some of the stats here. Now, guys, if we actually take a look at the last 10 earnings, it becomes a lot more 50-50. You'll see 5 out of 10 times calls at the open the dip, 5 out of 10 times puts at the open the bounce. So you have to decide yourself. Are you more someone who favors recency like myself? I favor 6 earnings over 10 earnings. Or are you someone who favors 10 earnings over 6 earnings, right? So guys, that's kind of what we got here. We're expecting an average move of 8%. Now, I have not done the math myself here actually, but let's just say we don't think that ULTA is going to recover this gap down here. Okay, so if we're expecting an 8% move down, right, that's our expected finish. Let's go ahead and put 289 times 0.08. I guess no, times guys, I gotta remember how to do math. I'll be right back. Okay, guys, I remembered how to do the math. It's simple, but for some reason I forget on the spot. Okay, so 290 times 0.92, right? That's going to be an 8% loss. We're expecting a finish down to 266.8, which would absolutely suck. Okay, that would be a shit trade. I don't want a 10-point DTR. I was expecting a 20, okay, because we expect a 23 average DTR. So, look, well, there's a lot of question marks here. We're going to just wait and see how this thing opens up tomorrow. We'll have a definitive conclusion tomorrow for sure. But based off the statistics, right, you know what to expect, okay? So, look, every single time post earnings day is a bearish day for ULTA, right? It's the following day, so it's just going to be Monday, okay? So let's just keep that in mind. It has a tendency to pull a shoe carnival, which means, hey, it's going to drop and actually recover. And so, look, if our expected finish is 266.8, then we probably expect it to bounce and then drop back down to 266.8. But when they just miss this bad on earnings and everything, I just don't expect it, right? But that's what the stats say, okay? So let's just keep it in mind. Once again, stats are to give us that baseline that we need. And then, once again, the shoe carnival, meaning it could recover on us, but once again, highly doubtable because they just missed earnings. They released shit guidance, so I highly doubt they're going to recover, especially Okay, especially based on the level, right? It's at the highs, but it just released shit earnings, okay? Now, good stocks don't even go higher when they're at their highs. For example, Crowd today, right? Remember this, guys? It basically failed to break out higher. We're expecting possible bearish continuation here, or at least a decent probability of it. But basically, this had amazing earnings, and even it had some reluctancy to move higher. So if Ulta's at its highs on the chart and it just had shit earnings, highly doubtable for it to continue and recover, which this is what I was trying to get you ready for, was a shoe carnival. But like I said, very unlikely at this point if they just shit their earnings, okay? So look, I was going to say this means that, hey, if you see it bottom out, get the fuck out, because basically it's going to reverse on you really hard. But I don't think we're going to have to worry about that now. I mean, this only happened 2 out of the 6 examples we went over above, but let's still be ready for it no matter what. I like to get ready for all possible contingencies, right? If that's the word. I try to act smart. I try to act like I really know what I'm doing. But I'm not an English guy. I'm a trader. Okay, so anyways, here's our conclusion. First off, it's up to you whether you want to trust the more recent earnings. And by recent earnings, I mean the last 6 reports or the last 10 reports. Okay, if you go off the last 10 reports, it's a 50-50 bias. There's no real bias. If you go off the last 6 earnings reports, you got a 66% short bias. Okay, and so the important thing to understand here is you have a huge DTR, and it's Friday, which means you can make a shit ton of money because every dollar you're in the money is going to be a dollar of intrinsic value, and it's on Friday, right? So guys, it's going to be highly profitable trade as long as we nail it. And so some great examples of what we're anticipating was YY or Shoe Carnival. And it's funny because I recorded this video on Sunday, and now I don't think we're getting either of these scenarios. So I guess it's good that I'm remaking this video here, because we were expecting it to gap up, pop, drop. Okay, that's definitely not going to happen. Why? It's gap down. Okay, what else was the other example we thought? We thought it was going to gap down and recover possibly, because that's what it's done 2 out of 6 times, which is still a decent probability of happening, right? So it was just one of the likely scenarios that could absolutely happen. But now that they've shit their earnings, I highly doubt it. Okay, guys, so this actually eliminates these 2 scenarios, right? It's not possible to get a pop and drop because we're not gapping up. Okay, it's possible to get this reversal, but once again, I believe the chances decrease because we shit the earnings. Okay, so what does that leave us with now as possible outcomes? Okay, it means we can gap down, continue lower, right? Or gap down, short the bounce. Okay, like I said, it's, at this point, I'm kind of, not listening to the data, right? Because this is what the data showed us was the most probable outcomes, but we're seeing we're not getting the most probable outcomes. And so when we go to the other outcomes, let's take a look at the most probable, not the most probable outcomes, but the outcomes that actually line up with what we have currently. You'll see gap down, continue lower. This has all matching characteristics of which we have currently, which is missing earnings, gapping down, and that's what it is, right? Let's go over one more example which lines up perfectly with what we have currently, which is this one right here. They miss earnings, gap down, and recover. Okay, so look, we still think there's a chance it could recover, but it's unlikely. And I would say that the reason we lean more towards unlikely is because overall we're bearish on the market. Now, you could say you're bullish, right? So then maybe you think we're going to recover on ULTA. But once again, we missed earnings. And guys, good stocks don't even go up on good earnings. So if it's a bad stock and it missed earnings, we don't expect it to go up. I mean, I don't expect it to go up, guys. I'm shorting this thing tomorrow. I'm telling you my conclusion. Okay, so look, that's my strategy going into tomorrow. I kind of disregarded the data somewhat, but not completely. I'm just basically saying, hey, there's no way we get these 2 scenarios, so that leaves us with actually less scenarios, which actually increases our chances of winning. Okay, so look. Okay, so if you made it to the end, guys, I mean, thank you so much. I don't know how the video ended up being so long. I swear, I'm not trying to ramble on about bullshit. I'm genuinely trying to, tell you everything I know here. Okay, so look, if you made it to the end, let me know, okay, because it means a lot. And, with that being said, drop a like if you haven't already. Make sure you're subscribed if you're not. You know my plan. I'm basically shorting the bounce unless, the gap changes, right? Something changes here. But it's not looking like it's going to gap up here, right? Probably going to gap down, and so that leaves us with the 2 scenarios we just went over, shorting the bounce or just shorting it near the open, right? So, guys, that's my plan. Let me know, do you think I'm disregarding the data a little bit too much? But I don't think it's disregard for the data. I just think it's disregard for the 2 situations we just are not going to get, right? It's not possible for us to get these 2 situations, or at least not this one. It's still possible to get this one, right? But we did shit the earnings. So, look, I think I'm being pretty reasonable, pretty logical here. but sometimes our intuitive judgments aren't always the best. So you let me know. The more opinions we have, the better, okay? And actually, maybe not, okay? Because more people are prone to being idiots than being smart. So I don't know, guys. Maybe give me your opinion. I don't know. I'm not trying to be rude. I'm just saying most people don't think straight. Most people don't think right. So, like, should you be asking people for their opinion? I don't know. But you can definitely let me know if you want, guys. I don't care. Anyways, drop a like if you haven't already, guys. If you want to take our course, you can down below, especially after you lock in some profits on this trade, assuming we arrive to a great conclusion by tomorrow morning, which I think we got a pretty good base conclusion going into tomorrow, but we'll adjust accordingly. We'll keep you updated tomorrow morning. Okay, and guys, just let me know, is this way too long of a video? Do I need to split it up or something? But think about it. We went over a lot in this video. We went over 4 things, okay? We went over ULTA earnings. We went over how to use the DTR. We went over identifying the reversal in Octa. We went over the volume characteristics on this reversal. So, like, it was a lot of things here in one. So let me know, is that just too much still? Even though we went over a lot, 4 in 1 video. I didn't try to, but the thing is, I would have to upload 2 videos tonight, so I might as well put in 1. Anyways, it doesn't matter. Just go on. We'll see you tomorrow. Get ready, get some rest, and we're going to finish off strong, okay? So drop a like if you haven't already. Turn your bell on if you haven't already as well, and we'll see you guys tomorrow morning on the next video. Bye.